In our last video, we talked about the likely coming of higher inflation. Our themes in emerging markets were effective pandemic management, moderate inflation, and exposure to commodities. And our preferred markets were China, Indonesia, and South Korea. But what stocks might fit those themes? Well, let's start with China. Strong economic recovery and controlled inflation should see continued improvement in Chinese banks' asset quality. And that should be one of the key drivers in the upward re-rating of Chinese banks. Our team's top pick here is China Merchant Bank, which is the country's second largest bank. We see double-digit earnings growth and rising ROE, driving a higher price-to-book valuation over coming years. And as we said in our last video, we also like real estate as an inflation hedge. A problem with Chinese property developers is policy risk. But investors may want to consider Hong Kong property developers, which have lower policy risk. The Hong Kong economy is recovering thanks to its effective management of COVID-19. Meanwhile, limited new supply should enhance the sector's appeal as an inflation hedge. Our team's top pick is Sun Hung Kai Properties, Hong Kong's largest property developer. For Indonesia, our preferred commodity play is nickel, which rides on the renewable energy theme. And the two stocks with nickel exposures that investors might consider are Anika Tambang and Vale Indonesia. Other commodity plays that might gain ground on the commodity theme are Merdeka Copper Gold for copper and gold, and Medco Energy for oil and copper. South Korea? Well, there we like semiconductors as a digital economy commodity, which like other commodities are also in short supply. For this, our sector analyst top pick is SK Hynix. We also like shipbuilders for the inflation theme, on the expectation of rising new building prices for vessels, as Asian shipyards are generally running at pretty full order books. In that sector, our sector analyst top pick is Korea Shipbuilding and Offshore Enterprise.